KNM Group has defaulted on 3 credit facilities, 2 totaling $23 million and 1 of 68.5 million euros on December 1st, or about 417.6 million ringgit in all. In a boss filing announcing the defaults by its wholly owned subsidiaries, KNM said it is presently in close negotiation with the lenders, although the repayment date has not changed from the November 30th deadline following a previous extension. The PN17 outfit said the events of default may trigger cross-defaults in other existing financial facilities. KNM says nevertheless it has been communicating with the respective financial institutions involved pertaining to the group's plan to improve its financial position in order for KNM's other existing financial facilities to remain status quo. KNM had timed the repayment to be done upon its disposal of its key subsidiary Borsig for 220.8 million euros. However, the Borsig deal fell through as the relevant conditions precedent were not fulfilled. According to KNM, that the event of default may have an adverse impact on its financing facilities in the event that KNM's respective financial institutions suspend their financing facilities pending the resolution of the event of default. KNM adds that the subsidiaries involved, namely Peterborough Green Energy, KNM Renewable Energy and Splendid Investments, are not considered the group's major subsidiaries. Hwa-Seong Corp has secured a contract with $127.09 million for the supply of certain floating production storage and offloading modules by Yinson Holdings. Its indirect wholly owned subsidiary WS Engineering and Fabrication was awarded the contract by Yinson's unit, Yinson Azalea Production. The scope of work involves engineering, procurement and construction of certain FPSO topside modules. The work and services of the contract are expected to be completed within 24 months, the group said, and will contribute positively to the group's earnings over the contract period. Additionally, the contract is project-specific and not renewable, according to Hwa-Seong. Hwa-Seong's share price slipped 2.4% or 1.5 cents to close at 61 cents on Wednesday for a market capitalization of 472.68 million ringgit. Yinson, meanwhile, finished up 2 cents or 0.82% at 2.45 ringgit, valuing it at 7.48 billion ringgit. The FBM KLCI is expected to breach the 1,700 level by end 2023 as valuations of local equities improve after the US Federal Reserve completes its rate hike cycle, according to MIDF Research. The benchmark is currently hovering around the 1,467 mark. Head of Strategy Syed Muhammad Kifni Syed Kamarudin said that MIDF is cautiously bullish on the FBM KLCI. However, he cautioned that there are factors limiting the KLCI upside, namely the potential recession in the world's largest economy and an escalation of geopolitical conflict. Based on historical data, Syed Muhammad Kifni said that an economic recession is poised to happen in the 12 to 24 months from the moment that short-term US Treasuries yield trends higher than that of longer-term peers, which was on October 26. Hence, he suggests that investors enter the market now to take advantage of the improving sentiment amid the Fed's pivot prior to a recession. MIDF's head of research, Imran Yassin Mat Yusof, said that Malaysia is not expected to fall into recession next year despite various external headwinds. Imran says domestic demand will continue to underpin the economy, adding that in Budget 2023, MIDF believes that a lot of rakyat-centric measures are going to stay, along with subsidies and inflationary pressure will come down. In terms of the overall Malaysian economy, MIDF's economist Abdul Muiz Mohalim said although the slowing global growth may weigh on local economic activities, the country's GDP is likely to remain supported by resilient domestic spending, albeit it easing to 4.2% next year. Imran Yassin forecasts that Malaysia's CPI will ease to 2.3% in 2023 from 3% this year, while Bank Negara will raise the OPR by another 25 basis points in another hike to 3% next year from 2.75% at present. Gogeta plans to acquire a 30% stake in ERS Energy for 200 million via the subscription of shares in the solar energy company. According to Gogeta in its boss filing, ERS Energy is one of the largest solar engineering, procurement, construction and commissioning players in the region, with a total project experience of close to 700 megawatts completed large-scale solar projects. It is currently a JV partner of Gogeta in Neda Pekan to develop a 39 megawatt solar power plant under the new enhanced dispatch arrangement management framework. The NEDA framework allows power producers such as renewable energy producers to supply energy to a single buyer, Tenaga Nasional, without entering into a power purchase agreement, and is expected to enhance the competition in the local power generation industry. Gamuda said the subscription price, which values ERS Energy at a pre-money equity value of 467 million, was arrived at on a willing buyer, willing seller basis, and the investment will be satisfied by cash funded via internal generated funds and borrowings. The group said the partnership with ERS Energy will enable the group to actively participate in the world's transition to net zero, in line with the Gamuda Green Plan, which commits the group to reducing carbon emissions intensity by 30% in 2025 and 45% in 2023. The investment will grow Gamuda's renewable energy asset portfolio to over 800 megawatts in the next few years. Solarvest Holdings is venturing into the electric vehicle charging port market with the launch of EV charging and mobility solutions under the name PowerB. Chief Strategy Officer Leon Liu Chi-ing says that the clean energy specialist is confident in leveraging on its current expertise in solar to develop this green charging infrastructure. Liu listed 3 target market segments and product positioning for PowerB, namely the residential segment, commercial and industrial, and along the highways. He elaborates that Solarvest will mainly target the residential high-rise buildings and its existing customer portfolio in commercial and industrial. Liu points out that Solarvest does not plan to compete with bigger EV infrastructure players like Petronas and Tenaga Nasional, but will instead aim to utilize the company's engineering expertise to work with and complement them. Meanwhile, Liu foresees EV adoption to be ramped up when automakers such as Perdua and Proton introduce affordable options to the market, which he believes may occur in the next 2 to 3 years. As such, Liu says that Solarvest does not want to be late to the game, hence its decision to go in with a phased approach where it will not pump in a large amount of capital until it sees adoption picking up.